Good morning, good morning, good morning, good morning, good afternoon, good evening, whatever time it is. It is 8:30 in the morning, East Coast, February 26th on Sunday. Starting here with the screen cover from last week's video of the week ending February 24th, how aggressive downside expectation. And it's exactly what we got, but it didn't come nicely. It was almost as if you were forced to watch a cotton swab just sit there and collect dust particles that were flying in the air. While we did have 5 of the last 6 trading sessions close down, 47-point range, 33-point range last week Friday. This week, short week, only 4 days, 57 points, most of which happened in the first 15 minutes of the day on Monday, with the gap down. 40 points on Wednesday. Then you had a 59-point move when we had that green day that we knew we were going to get over there on Thursday. Closed green. Still closed red below the open, but we closed green. And then you had Friday. As horrific as it may have looked on Friday with that 1.5% gap down, 35-point range during the day. 35 points. S&P's up 3% on the year, down 7.4% year over year. For the month, we're down 2.46%. We now have 3 red weeks in a row, a very, very significant count. February, we're down 200, or total range, 252 points, which is 40 points shy of the minimum of what we've had so far, going all the way back, because we're typically not getting less than 300, but it's very, very adequate, and it kind of starts to fall into our time frame here. So down 6.02% for the month. I cover hundreds of stocks. Hundreds. If you want any of them, all you got to do is ask. I got them all over the place, but I'd rather not waste everybody's time and go over 19 different stocks when nobody wants to trade them. They all want to do the SPX credits. So come on back here, and I found this in the chat room, which was what I had posted on February 2nd, 3 o'clock in the afternoon. The 1, 2, 3, 4 drop marks, and number 4 right there at 39.80 was where we had been during the course of this week until Friday, when we had the big 1.5% gap down. As had mentioned, we're at risk of a pretty good sell-off on Friday, and that's exactly what took place prior to the open. But what we're looking at here is we've dropped greater than 1% on Friday. We did it on Tuesday. We did it last week Friday. We did it last week Thursday. We did it last week Tuesday. We haven't had a plus 1% from the prior close day in more than 2 weeks now. Call it 2 weeks, since Monday, February 13th. So it's coming. It's coming, and it should be happening very early this week. I would think probably no later than Tuesday. Looking at the schedule that we have absolutely nothing happening this week. Durable goods, consumer confidence, manufacturing PMI, ECB minutes on Thursday, jobless claims, and then services PMI later on Friday with a couple of speakers. Now, we could get more speakers during the course of the week, but as of right now, that's what the schedule is. The big schedule, the big schedule is on Tuesday, Wednesday. When is that? Tuesday of next week is March 7th. March 7th, Jerome Powell is going to be speaking to the House subcommittee about blah, 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 blah. Doesn't fucking matter. But every time Powell speaks, the market rallies. March 7th is your next full moon. The next March full moon is Tuesday, March 7, 2023. So your next full moon is on March 7th. Jerome Powell is speaking on March 7th. I'm going to see my daddy on March 7th. If you don't remember that movie, you got to go watch it. So anyway, I'll bring you over here to the charts real quick, and I'm going to be zooming in and zooming out, but you've got a lot of advantages to you right now on a number of different levels. We rallied 20% from the October lows when we hit that 41.95, and we've now dropped down 6%, 6.02%. We've dropped down right down to these trend lines, which are pretty significant no matter how you want to look at it. We're down on that trend line almost from the all-time highs, going back to the March high to the August high. We're very close to that. We've been holding this big 39.50 level for a while, and more importantly, you have a major gap to be filled here from the weekend, or from Friday, sorry. A big gap to be filled from the weekend, and then we have another gap up here to be filled. So all of this is going to be filled all during the course of March. And as we come in closer to March, we will be able to look at that in a much brighter way. From an Elliott wave point of view, it's ugly. I mean, God, it's ugly. But as long as we're holding that 39.12, there's a very, very small chance that this Elliott wave is still intact as far as the projections go. We hold here at 39.12, and our next move is up here into this 4,300 level, 43.25, 43.50, 43.78, basically coming back to the August highs. That's what is there as far as everything that we're looking at. That's what's there. So it's in place. Looking back here onto your full moons, and look, I don't care who you are. You gotta respect that this has been a very, very strong pattern. So we're right here below the 50-day moving average, made contact with the 200-day moving average there on Friday, and we're going to be getting another full moon as we approach into this weekend, where the full moons are always plus or minus 4 days. 7 is on Tuesday, so 1 on Monday, 3 on Friday. So between Thursday and Friday, the window starts to open for where we start to look for a bottom. And after that bottom is placed, just going ahead here and trying to do some projections, we should see the next full moon be up in here into this area. And you can already see the pattern that you're looking at there as to how this could all play out. So we're just waiting for this bottom to be placed, and the bottom should be placed. I want to go and say that if it isn't in already, then we're going to revisit down there at that 39.40, 39.20 area on Tuesday. Big thing to consider here, looking at these levels, is this is the daily. You got a little bit of a buy divergence over here on the daily, and you got a little bit of a warning here that, hey, man, you're a little bit oversold. So, you kind of might want to consider that maybe this is the bottom that you're placing here, and you can go out there and start looking at some forward-looking bets because, again, over here on the weekly, which is a really big factor, the weekly is undoubtedly pointing downward. It wants to go lower. You got 3 red weeks in a row. I can bring this into every highlight you could possibly imagine. 3 in a row here. We had 4, and 2 of them were complete wastes over here in December. You had 3 here and 3 here on the drop down in August, 3 here on the dead cat bounce in May going into the June low, a once in a trader's lifetime 7 in a row back here off of that March sell-off. But go back as far as you want to go. You will almost never, ever see 3 in a row start to show up and you don't get a red one, or a reversal and a green one on the 4th week. So again, where we open up this week would definitely be looking at something that is going to say, hey, we have hit a bottom. So again, Everything wants to say that we're very close, if we haven't already hit our bottom. And one thing you need to kind of look out here and respect is you've got a 6% drop on the SPX. And as long as this takes to load up, I will divert and bring us over here looking at the daily. And again, looking here at the daily with the RSI 5 and the 30 break mark, you can see here on the daily, you are clearly in a not only oversold, but you have a very, very small buy divergence that is trying to show up there. I will continue to state that this is very, very negative from that true strength index, and that any kind of a bounce is going to have to continue to be watched on this true strength index, because not only is it there, but you come over here and again, you see your weekly wants to sell down a little bit more to get oversold. It's possible, without a doubt. But this is very dangerous over here, how your weekly true strength index is starting to look as if it wants to kiss and possibly roll over. So again, we got 3 red weeks, very much looking for a green week and those gaps to be filled to the upside. We will see what it is that is going to produce for us if we can be very confident about looking for that 43.25 as we're going into the month of April. But yeah, bringing you back over here as long as these charts have loaded, and they have loaded. Look at that. Here is your VIX for, again, 30 days. This is not a bearish VIX. It's just not. And we've got this gap that needs to be filled from last weekend. Never produced that higher high over here as you had the greater sell-off there on Friday with the big gap down. It looks very, very much like you are getting your bottom formed over on the S&P, QQQ, blah, 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 and we should be looking middle of the week as we head into the weekend for a good buying opportunity to be able to get into some calls from middle to the end of March, possibly even the beginning of April, and utilize everything that we have for our projections, our timelines, and start to look somewhere in that 40-20, 40-30 area over on SPY. So have a fantastic Sunday. Pull up the SPY chart, which I know is going to be one that's already going to be messy. Too much information, too quick. It is definitely going to be. Yeah, you can see here, just looking here, these pop-up sell-offs, pop-up sell-offs, pop-up sell-offs, pop-up sell-offs. Continued pattern of those. But as of right now, and this is 393.64, 393.64. We're looking at 399.46. 399.46, we're looking at 403. 403, we're looking at 406. 406 would bring us back and still not fill the gap from 2 weeks ago, back there over on February 17th. So we're undoubtedly going to be looking over at that. If we do get this gap that gets filled over here, this, we're obviously looking at that 410 area as where our problem is with that 408. Slow, small steps. 400 calls. 400 calls will for sure be something that everybody will be wanting to have on their screen if you're going to be trading those. As for the SPX credit spreads, it's going to be a time this week to get a little bit more aggressive on playing those bullish puts. And I'll continue to give you as many updates as I can, as quickly as I can, as soon as they show up. Have an awesome Sunday. See you guys in the chat room.